Hello everyone, this is Gracie here. In this video, we will be discussing problem 3.3. So under this problem, product B is obtained after it passes through three distinct processes. The following information is obtained from the accounts for the week ending 31st October 2008. Items, direct material, direct wages, production overhead. Then total, they've given the total as well as for process 1, 2, 3. What is the amount? They've given it separately here. Together the total of process 1, 2, 3 is also given here, which is 7,548. Then direct wages 9,000. 9,000 is a total, but process 1 it is 2,000, process 2 3,000, process 2 3,000, process 3 4,000. So the total of it will be 9,000. Then production overhead, they have not distributed it to process 1, 2, 3, but they have given the total here. So next is 1,000 units at rupees 3 each were introduced to process 1. Okay, this is the input for your process 1. So how many units? 1,000 units at rupees 3 each. There was no stock of material or work in progress at the beginning or at the end of the period. The output of each process passes direct to the next process and finally to finished stock. Okay. Production overhead is recovered on 100% of direct wages. So here they have given you production overhead total, which is 9,000. But to divide into process 1, 2, 3, they have given in the adjustment here stating production overhead is recovered 100% on direct wages. So have they given direct wages in the problem? Yes. Direct wages is how much? For process 1 it is 2,000, 2, 3,000. For 3 it is 4,000. So let us do the calculation for process 1. Direct wages is 2,000. Production overhead is 100% of direct wages. So for process 1 direct wages is 2,000. So 2,000 into 100% will give you 2,000. Same thing for process 2. 3,000 into 100% will give you 3,000. Then for process 3, 4,000 into 100% will give you 4,000. So 2,000 plus 3,000 plus 4,000 will give you 9,000. So the total is correct here, which is 9,000. Next we will look into the following additional data are obtained. Process 1, 2, 3, output during the week 950, 840, 750. Percentage of normal loss to input is 5%, 10%, 15%. So this is the percentage of how much is been gone out, or the how much is the normal loss which is occurred. Then value of scrap per unit, which they have stated here 2, 4 and 5. It is rupees 2, rupees 4 and rupees 5. So prepare process account and abnormal gain or loss account. So let me explain you what is your abnormal gain or loss account. So abnormal gain or loss is nothing but it is a loss which is due to carelessness. So if one is careless and careless in manufacturing activities or rendering the goods to the final consumers, any carelessness occurred by the manufacturer will lead to abnormal loss account. It can be any losses, like for example, this type of loss consists of loss due to carelessness, machine breakdown, accident, use of defective materials, etc. Thus, it arises due to abnormal factors and represents a loss which is over and above the normal loss. So, accounting procedure for normal loss and abnormal loss differs. So for normal loss, the scrap value is given. You will multiply with that scrap value and find out the value. But when it comes to abnormal loss, you need to multiply, you need to use the formula, and with the formula you get the per unit value. Then from the per unit value you will find the you will multiply with the abnormal loss unit. So this is known as abnormal loss, which is occurred due to carelessness, machine breakdown, accident or use of defective materials. So if the manufacturer is careful enough to control, this is controllable loss, which these losses can put into control by proper inspection and supervision of the manufacturer. So abnormal gain is the gain which occurs which is uncertain, so which occurs without the knowledge of the producer. Might be output is more when the input is less than your output, then you will have your abnormal gain. So in this problem they have given you percentage of normal loss 5%, 10%, 15%, and for the sale of this loss also they have given rupees 2 per unit and 4 for 2 process 2 and 5 for process 3. So they have asked us to prepare process cost account and abnormal gain or loss account. So let us get into your process 1. So now This is your process 1 account, particulars unit amount, particulars unit amount. So the number of units introduced is there in the question, which states 1000 units at rupees 3 were introduced. So 1000 into 3 will give you 3000. Then you need to record your other expenses or inputs. Other expenses are direct materials. For process 1 it is how much? 2600. So you will be writing here 2 direct materials 2600. Then your direct wages 2000. So you will be considering direct wages 2000. Then as per your production overhead, the total is given, but for process 1 is not stated. So but the adjustment states production overhead is recovered on 100% of direct wages. So how much is your direct wages for process 1? Your direct wages is 2000. So 2000, 100% of direct wages. So 2000 into 100% will give you 2000. So next you will see, next is your debit items are over. You have taken all your inputs. Next you need to consider your outputs. So your outputs are nothing but your normal loss, abnormal loss, and the goods which has been transferring to the next process. So okay, do we have normal loss in the problem? Yes, we have normal loss, which they have stated 5% of the input. How much is your input for your first process? They have stated input is for the process 1, the beginning units or the input units is 1000 units. So 1000 into 5% will give you 50 units. 1000 into 5% will give you 50 units. And for this, have they given the resale value or scrap value in the question? Yes, if you look into this, value of scrap per unit is 2 for process 1. So how much is your normal loss? 5000 into 5% will give you 50. So what is the scrap value which is given? 2. So 50 into 2 will give you 100. So it is rupees 100. Next, what is your next thing? Processes, you need to check whether you next you need to check whether they have given how many units are being produced from that particular process. They have given here process 1 output during the week is 950. So they clearly stated 950 is going out of process 1. So you will record it here. By process 2. So as you're transferring, the output of this process will be an input for your next process. So as it is going from process 1 to process 2, you will be writing by process 2 because they are the receiver. So how many units as per the question? They have stated 950 units. So you will write here 950. So after this, you need to look into the total unit calculation, because after this we are not going to get any units to be added over it. This is after you get write your process 2 account. This is the last units which you will be recording. Now we will look into your input units 1000. Now your output units is 50 and 950. So when you add up 1000 here, then if you add up 950 plus 50, you will get 1000. So here if you look into both the input as well as the output matches. It is 1000 here as well as here also it is 1000. 950 plus 50 will give you 1000. So by this what you understand is there is no abnormal loss. So as I have told you all, if the input is more than your output, then you will have your abnormal loss here. That means you have produced so much. If your input is more than your output, that means there is some loss incurred in your output. That is why it is less than your input. But if you look into here also it is 1000, and when you add up the number of units here also it is 1000. So there is no any careless loss what you have done. So in this process it is nil. So you will tally the amount now. So you will total up your debit side and the difference would be written in your process 2. By process 2 for 950 units, how much is that? That amount will be transferred to your process 2 account. So here when you total is 1000 units. 3000 plus 2600 plus 2000 plus 2000 will give you 9600. So 9600 is your total. So out of here, if you look into units, 50 plus 950 will give you 1000. So with the difference, balancing figure you will be finding out. 9600 minus 100 will give you 9500. This is the amount and units which you will be transferring to your next process. So your next process is your process 2. So in process 2 account particulars, so what is the balance which has been, what is the output for your process 1? You need to check. So output for your process 1 is by process 2 950 units and 9500. This output will be an input for your process 2. So process 2 account, this is a process 1 output to process 1, as you're receiving from process 1 to process 1. How many units? 950. What is the amount? 9500. Next, you need to record all your expenses. So look into your expenses. You have direct materials, the 1980, direct wages 3000. So you will write here direct materials 1980 and direct wages 3000. Next, about your production overhead, which they have not stated, but they have told you production overhead is 100% of direct wages. So how much is your direct wages for process 2? 3000. So 3000 into 100% will give you, so 3000 into 100% will give you 3000. So after recording your inputs, you need to check whether there are any other inputs. So there are no inputs left here, so you will write up your output column. So when it comes to output, remember you will have normal loss. Have they given the normal loss? Yes, they've given percentage of normal loss to input is 10%. So how much is your input for your process 2? Just check your ledger account. So for your process 2, how much is the input which is introduced? It is 950. So 950, what is the normal loss percentage given in the question? It is 10% for process 2. So 950 is the input. On 950, 10% will give you 95 rupees. So 95 rupees into what is your, so 95 rupees. So what is the cost or resale value what you're using for your normal losses? Resale value is rupees 4 for process 2. So into 495 into 4 will give you 380. So how many units is the loss? 95 units. How did you get this 95? 950 into 100%. So what is the loss which you're setting up, or for how much you're selling this? For 4 rupees per unit. So 95 into 4 will give you 380. So after this we will look into how much units are being what is the output for this particular process. So if you look into the question, for process 2 the output is 840. So you will write it down here. Process, as it is been from process 2, any output of the process 2 will be transferring to the process 3 through you. So you will be writing here by process 3 account, as they are the receiver. By process 3 account, how much is it? 840 as per the question. So now you will calculate whether you will have abnormal loss or what. So you have got process 3 840. So now here the total units is 950. And here you have normal loss, you have process 3. Still you have not, please don't write this. So please understand, as this figure is not written here. So you have only written till by process 3, which is 95 units and 840 units as per the question. So now you have 950 here and you have 95 here and 840. So if you look into here, 950 minus 95 minus 840, you will have difference of rupees. You will have difference of 15 units. So you will get your abnormal loss 15 units. How did you get? 950 minus 95 minus 840. So there is a difference in your output. So your input is more than, input is how much? 950, which is more than your output number of units. So when your input is more than your output, you will be getting normal loss, because you will think you need to produce 950. You have introduced 950 units, but when you produce, at the end of the day you get less than what you have introduced. That means there is a loss which has occurred to the units, to the raw materials, to the units which you have introduced. So obviously when your input is more than your output, so output is your actual output what you're getting. If it is less, that means there is loss in the process. So how much is less in your output? 15 units. So that 15 units will be taken as abnormal loss account. So for this you need to find out how much is your abnormal loss amount, then that difference, then later the difference in the amount will be considered in your process 3. So always remember, your balancing figure will be your output, the amount which will be transferred to your next process. So the output of one process will be the input of the other process. So your balancing amount will always be by process account. So this will be your balancing figure. In your previous process, it was by process 2. That was your balancing figure. In this process, in your process 2 account, by process 3 will be your balancing figure, not your abnormal loss. Now you'll find out what is in amount for your abnormal loss. So I've taught you in my last video what is the formula to be used. So what is the formula to be used is, abnormal loss account is equal to total cost, that is your 9,500 plus 1,980 plus 3,000 will give you 17,480. So 17,480 is your total cost. Total cost minus normal loss cost. So how much is your normal loss value? 380. So divided by 950 is your number of units. Total number of units is 950 minus normal loss units. How much is your normal loss units? 95. So total cost minus normal loss value divided by number of units introduced minus your normal loss units. So when you use this formula, then you will be getting your normal loss cost per unit. So 17,480 is your total cost. How much is your normal loss cost? 380 divided by 950 is the introduced units minus 95 is your normal loss units is equal to rupees 20 per unit. So you will be getting rupees 20 per unit. So how did you get this abnormal loss amount? Is 15 into 20 will give you 300. So 300 is your abnormal loss value. So 300 is your abnormal value. So now you got all your amount. So now you need to check the balancing figure. How much is your balancing amount? That will be your by process 3 account. So that will be your balancing figure amount. So if you look into here, your balancing figure is 16,800. So the total cost here in your input column is 17,480 minus 380 minus 300 will give you 16,800, which will be your balancing figure. So your balancing figure is 16,800. So always remember, by process account, the process account will be your balancing figure in all the processes. So next is your process 3. So process 3 account, particulars, unit amount, particulars, unit amount. So now we need to write all your inputs. First will be to process 2. So the output of process 2 will be an input for your process 3. So what was the output for process 2 account? Your output is how much? By process 3 account, 840 units, 16,800 is the amount. So 840 units and 16,800 is your output of your process 2, which is an input for your process 3. Now you need to check all your expenses which is incurred. So your expenses are direct material, direct wages and production overhead. How much is your direct material? For process 3, 2,962 and direct wages is 4,000. So 2,962 plus 4,000. 2,962 is your direct materials, direct wages is 4,000. Then your production overhead is 100% on direct wages. So how much is your direct wages? 4,000. 100% of direct wages will give you 4,000. So later, after finishing your input, next is your output. As soon as you start your output, you need to check whether they've given in the problem your normal loss. Yes, they've given your normal loss in the problem. So your normal loss is given. How much is your normal loss percentage is, which is 15%. So how much is your units introduced? Your number of units introduced is 840. 840 into 15% will give you 126 units. So now 126 units is the number of units. So normal loss value, how will you calculate is, just look into the scrap value. So your scrap value is 5 rupees 5 per unit. So how much is your normal loss unit? Your normal loss unit is 126. So 126 into 5 will give you 630. So 126 into 5 will give you 630 rupees. So that is your normal loss. Next you need to check what is the output for that process. So if you look into your process 3, your output is 750. So 750 is your output. So you will be writing 750. 750 by finished stock. As process 3 is your last account, you will be writing here as 750. So now you need to check whether there is abnormal loss or abnormal gain. So total up your inputs. total up your inputs and your output units. So if you total up your input value, you will be getting 840. Then if you total up your output value 126 plus 750, you will be getting 876. You will be getting 876 if you total up 126 plus 750. But your input is how much? 840. Your input is 840. Your output is 876. So your output is more here, isn't it? So you have produced more than what you have introduced. So what you will do is you will be getting your abnormal gain because your output is more. So it is a gain for you. So you will be writing, so here you will be writing to abnormal gain account 36 units. So 8 you will be getting set 126 plus 750, you will get 876. So what is the difference? 876 minus 840, what is the difference? 36 units is your abnormal gain. So you will write your abnormal gain units 36. Now you will find out the value of your abnormal gain. What is the cost per unit? The same formula as abnormal loss and abnormal gain. So abnormal gain abnormal gain is equal to total cost minus abnormal loss cost divided by total units total units minus normal loss units. So what is your total cost? You will add up 16,800 plus 2,962 plus 4,000 plus 4,000 till here. The total cost is 27,762 and your normal loss cost is 630. So 27,762 minus 630 divided by total units introduced is 840. 840 minus normal loss units is 126. So when you minus the numerator, you will be getting 27,132. When you minus the denominator, you will be getting 714. So 27,132 divided by 713 will give you rupees 38 per unit. So this is your abnormal loss value. Which is abnormal gain here. So how much is your abnormal gain? Number of units 36. What is the cost? 38. So 36 into 38, you will be getting 1,368. So now you need to find out how much is the difference. So we will total up, you will be getting the difference. So when you total up your input, you will be getting your number of units will tally for both because you have set up here by getting your abnormal gain. So 876 and 876, and you will total up your cost and your abnormal gain 16,800 plus 2,962 plus 4,000 plus 4,000 plus 1,368. You will be getting 29,130. So 29,130 minus 630 will be the difference for your finished stock. As this is the last process in your problem, you will be transferring the stock to your to the balance of your process to your finished stock. So 29,130 minus 630 will be, you will be getting 28,500. So this will be your balancing figure. So in this problem, what is in this process, what is the difference is you are getting abnormal gain. Why did you get abnormal gain? Because your input is less than your output. In process 2, you got abnormal loss because your inputs were less, your inputs were more than your outputs. So next is your we will be preparing your abnormal gain, abnormal loss account. So next they have asked us to prepare abnormal loss account, abnormal gain account and normal loss account. So to prepare your abnormal loss account, you need to check from which process you have abnormal loss. So if you check in your process 1, 2, 3, you have in your process 1, you don't have any loss. You have only your normal loss there, because as we are preparing only abnormal loss, you will be considering only abnormal loss account. So in your process 1, you don't have abnormal loss. In your process 2, you have abnormal loss. So in your process 2, what is the abnormal loss you have is 15 units is your abnormal loss, and the cost is rupees. Your total cost is 300. So if you look into your abnormal loss, so this is your process 2. your process 2 account. Here you have abnormal loss of how many units? 15 units, and the cost what you have calculated is 300. So that is what you will be taking in your abnormal loss account. So in your abnormal loss account, 2 process, there it was by abnormal loss, so here it is 2 process 2, how many units? 15 units. So what is the cost? 300. Next, you will be using the sale value as you're selling the scrap. Loss, abnormal loss is also a loss, so any loss which is being sold is the sale of scrap. So where you're selling it, so it might be a percentage of that loss can be recognized or sold. So the scrap value is applicable both for normal loss as well as abnormal loss. So for your process 2, what was the scrap value given in the problem is, your scrap value for in the problem which is given is rupees 4. So here what is your abnormal loss units is, so what is your abnormal loss units is 4. Here you have abnormal loss units is 15. So 15 into 4. So scrap value is 4. So how much can you realize is only 60 rupees. So out of 300 loss, you can only realize by selling the scrap of for only 60 rupees. So the remaining will go to your profit and loss account. So what is the remaining? 300 minus 60 will give you 240. So 240 rupees is a loss which will be going to your profit and loss account. Next, after preparing your abnormal loss account, we will prepare your abnormal gain account. In your abnormal gain account, we need to check in which process we have abnormal gain. So first process nil, we don't have loss or gain. Second process we had abnormal loss. In your third process we have your abnormal gain. So in your third process, your abnormal gain, so your process 3 has abnormal gain account here, which has 36 units of rupees 1368. So it is 2 abnormal gain. So it will be by process 3 account when you prepare your abnormal gain account. So in your abnormal gain account, it is by process 3, 36 units, 1368. So out of this abnormal gain account, if shortfall in the sale of normal loss at rupees 3 per unit. So if out of this gain, you can adjust your normal loss. So your normal loss for that, so your normal loss you have for your process 3 is 126 units and for 632 rupees. As you've got abnormal gain, you can set up this normal loss. So how are you setting up this normal losses? So you have 36 units of abnormal gain, so you can set up 36 units with the scrap value which is there. So 2 normal loss, shortfall in the sale of normal loss at rupees 3 per unit, at rupees 5 per unit. So how did you get this 5 is, which is stated in the question, the scrap value for that problem is, for your process 3 is rupees 5. So this is the 5 what are you seeing here is, you're setting up this 5 rupees. So 36 into 5 will give you 180. So this scrap is been setting up. So if you look into your, if 36, your normal loss is adjusted to 36 units for 180 rupees. How much was your normal loss here? 126 and 630. So among this 126, 36 is adjusted. Among the 680, 180 is adjusted. So your normal loss will decrease now. So what is the remaining? 1368 minus 180 will give you 1188. So this will go to your profit and loss account as profit. So 2 costing profit and loss account as profit. So this is the remaining amount which will be your profit after setting up your normal loss. Next we will prepare your normal loss account. Normal loss account. So you have normal loss in all the 3 processes. So it will be as by normal loss in process 1, by normal loss in process 2 and by normal loss in process 3. So when it is by normal loss there, here it will be 2 process 1, 2 process 2 and process 3. Then the number of units as per the ledger entry you have prepared, you will pick up from there the numbers, which is for process 1 it is 50 units at rupees 100. For process 1 you can look into here. So for process 1 it is 50 at rupees 100. So you have taken 50 at rupees 100. For process 2 it is 95 at rupees 380. So you have taken here 95 at rupees 380. So process 3 it is 126 at rupees 680. So 126 at rupees 680, 630. Sorry, 630. So the total will be 1110 and units will be 271. So out of this normal loss, you will have the you have your abnormal gain. So by abnormal gain, you will be taking your 36. In your abnormal gain account, you're setting up the normal loss. How much you're setting up? 36 and 180. So you're out of your total normal loss, as you're setting off by abnormal gain account 36 units, and what is the amount? 180. So if you look into, if you minus 271 minus 36 and 180, you will be getting the difference of 235 and 930. So that will be by cash account. We have received cash by the sales. So this will be the balancing figure. So out of this normal loss, you are setting up of abnormal gain so much. So the actual scrap what you are selling will be 235 and 830. 830 amount. Out of 235 units, 8 rupees 830 you are selling. So here by cash you will be receiving cash for the sale of scrap of rupees to 930 rupees by selling. So this will be your balancing figure as by cash, which is in bracket, which is nothing but your sales amount, your normal loss sales amount. So this is the accounting ledger for your problem 3.3. Thank you everyone.